The world's most groundbreaking ideas always seem crazy at first. They often require looking foolish for a while, but having faith in your convictions and sticking it out while you're in this phase is the price of admission for massive wins. What can we learn from the world's greatest hedge fund manager and his trading algorithms that will inform why Bitcoin's price will have outsized returns moving forward? And why Jack Dorsey and many others believe that Bitcoin's price will be $1 million per coin by 2030. Bitcoin is an idea whose time has come. Welcome to Bitcoin Daily. I'm Dante Cook, head of Swan Business. We learned that this morning, Jim Simons died at 86. Jim Simons was the founder of Renaissance Technology and the greatest hedge fund manager of all time. His medallion fund returned 62% a year for 33 years, making it the most successful hedge fund by far. Just $1,000 into the medallion fund in 1988 would leave you with $42 million today. Jim's life can be characterized as an outsider, someone who was overlooked, someone who struggled, someone who was persistent, and did what he thought was right, even when it was unpopular. At just 29 years old, Jim was one of the greatest mathematicians and code breakers in the world. Jim worked for the NSA and actually broke codes that were famously thought to be unbroken from Russia. During the Vietnam War, Jim's colleagues and other people had some pretty outspoken thoughts that he didn't agree with. So, he decided to do what he thought was right against popular opinion, and that was to write an article stating his beliefs on the Vietnam War in the New York Times. This obviously wasn't liked by his colleagues and got him fired. So at 29, he left a very good career and one of the best at what he did in the world for doing what he thought was right. He ended up going to Stony Brook to build their math department over the next 10 years. And during this time, he felt that there was a code to be cracked, but not for Russian spies or the United States government. It was for the Wall Street markets. He felt that if you could look at the past performance of how currencies traded, you could predict future movements and future price performance. So at 40 years old, Jim left his role in academia, was going to be a tenured professor, and his own father said that this was a stupid idea. Jim convinced a few old colleagues of his to come with him to start to build these trading algorithms. He believed that a computerized algorithmic trading system could outperform the market. And although they had some really good streaks, they lost a lot more money than they made for clients. When Jim was at the bottom and in the pit of despair, in 1988, his trading algorithms finally started working and things turned around almost overnight. Jim's trading thesis was this. He believed, like a casino, if he made a large number of bets, he would only have to make profitable bets 51% of the time. They built an edge with back testing and highly sophisticated statistical models. But the genius of their trading algorithm was that they were 100% right 51% of the time. In 1990, this trading algorithm was making their firm $1 million a day as they returned over 78%. What's funny was that everyone in Wall Street still insisted that they were just lucky and didn't know what they were doing. Why am I telling you this story? It's because in order to make outsized returns, you have to look foolish in the short term. It requires you to have faith in the long-term direction of an asset or an idea that you believe is true. In 2006, a former shadow employee of Jeff Bezos, an intern, Andy Jassy, wrote a paper that would soon become AWS. And this came from the frustration that internally Amazon didn't have the infrastructure and the tools to reliably build technology solutions for their own company. The idea was massive in that not only would they build tools to help them build technology faster, but other companies. AWS, which was a crazy idea at the time, has now at a $100 billion run rate as they hit $25 billion in revenue this past quarter. And another popular underdog story, a note from Joe to Brian. Joe thought that they can make a little bit of extra money creating a designer bed and breakfast for a bunch of designers that were coming to San Francisco for a conference. We know that those two people now are Joe Gebbia and Brian Chesky of Airbnb, the largest hotel and property company in the world that doesn't own any hotels or any property. Crazy idea. And in the same way, An anonymous developer posted a white paper in 2008 stating that they had solved the Byzantine general's problem and the ability to have peer-to-peer transactions without a central authority in the middle. This was Satoshi Nakamoto, and obviously this crazy idea we all know now to be Bitcoin. The idea was created because we needed a system that ran completely off of trust, but not in trust of people like governments, banks, and central banks. As a matter of fact, Bitcoin was created in direct opposition to comments like this.
When I look at Bitcoin, as a historian, I don't like it because this is a money built on distrust. The central idea of Bitcoin is basically electronic gold, that we don't trust the banks, the governments, so we don't want to give them the ability to create as much money as they like, so we create this Bitcoin. It's a currency of distrust. I do think that the future belongs to electronic money, but what we've seen over the last centuries is that it's actually a good idea to give banks and governments the ability to create more and more money in order to build more trust within society. So I'm not sure what money would look like in 20 years or 30 years, but I hope it will be a currency of greater trust and not a currency of distrust.
Yuval Harari, who's a historian, a philosopher, and author, doesn't seem to know his history quite as well as he claims that he does, because it's exactly this reason why we need to pull more and more authority away from the banks and governments. Bitcoin has grown from just an idea to a global movement and a really powerful technology. One that allowed someone just this morning to send $1.4 billion worth of Bitcoin for a $6 fee. An idea that was once hated by the banks and caused many account closures for people across the world who were buying Bitcoin, to now being an asset that the third largest bank in the world, Wells Fargo, holds on their balance sheet. This is now a technology that publicly traded companies like Block are building protocols like TBD on top of that will allow 1.4 billion people that have access to a mobile phone to participate in the larger global economy. Jack Dorsey, the company's co-founder, said that he believes that Bitcoin's price could reach $1 million per coin by 2030. And it's easy to see when even Japanese companies like Metaplanet are adding another 19 Bitcoin onto their balance sheet for a total of 118 Bitcoin worth $7.4 million. Two final thoughts to leave us with from studying Jim Simon and his trading algorithm. His model was predicated on being 51% right across a large number of bets. How does this apply to Bitcoin? Fiat currencies are 100% guaranteed to debase or lose value against harder assets. So when the currencies devalue, scarce assets tend to go up in value, like Bitcoin. Take the Argentinian peso, for example, who just issued a $10,000 note into currency because it has a 290% inflation rate this year. Anyone storing their value in pesos is guaranteed to lose value. Anyone storing the value of those pesos into Bitcoin is guaranteed to gain value in that local jurisdiction. This phenomena isn't just happening in Argentina. It's happening in fiat currencies in locations all across the world. So, if you believe that just 51% of the time Bitcoin will gain value relative to a fiat currency somewhere in the world, then you have a positive asymmetric bet. If you were Jim Simon, you would place a bet on Bitcoin being worth more tomorrow than it is today, even if people thought you were crazy in the short term. And my last thought on Jim, I realized that not all people who are famous or who are successful in business should be followed or copied or replicated. But I do admire this one thing about Jim. Listen to this quote about what he says is the story of his life.
I did a lot of math. I made a lot of money, and I gave almost all of it away.
So what if you gain a ton of money? I've never seen a U-Haul attached to a hearse. Some of y'all are crazy. I know you might have a cold card in your cold hands in your own casket. But the more noble thing, the better thing to do with that corn that you've been stacking through your Swan app is to think about how you're going to benefit society, your community, your family, or other people beyond yourself with the wealth you've acquired. Will you give it away? Will you share it with other people? One thing I do know, Bitcoin is an idea whose time has come. And I believe that the crazy people who invest in Bitcoin today will be able to bless their communities and other people beyond them tomorrow. So what bet will you make? With that, we're signing off for today. This is Dante Cook with Swan.com. Happy stacking.